The market cascades into chaos. While the crowd panics, power changes hands. Power changes hands in the silence. Recessions do not destroy wealth, they merely shift it. They move it from one hand to another. The crash put everything on sale. The prepared bought the future cheaply. Paper money loses trust. Hard assets gain power. In times of crisis, hard assets gain monumental power. Crises change consumer behavior forever. Those controlling supply chains print money. The prepared don't fear recessions. They hunt opportunity inside panic. The countdown hits 0. Opportunity arrives. Food never stops mattering. It remains a fundamental anchor. Smart money moves toward human necessities. The next billion-dollar company starts during chaos. Desperation creates innovation, sparking the next multi-billion-dollar vision. The biggest recession deals are never public. In high-stakes environments, information becomes the ultimate currency. In the shadows, empires are traded. One acquisition during a recession can fund generations. The dangerous phase begins when panic becomes reality. Streets empty as fear takes hold. One rumor can move billions overnight. The prepared always move first. Layoffs create fear for some and freedom for others. The banner of a new beginning appears. The old world goes dark room by room. Government spending always lands somewhere. Follow the money before the crowd does. Behind every foreclosure is someone else's opportunity. A new era of ownership begins. Legendary investments are made when everyone else is terrified. Analysis overrides emotion in the dark. When fear rises, protection becomes priceless. Threat never takes a holiday. The headquarters stands as a monolith. Healthcare never waits for recovery. Demand keeps growing through every crash. Intellectual property scales forever. Create once, earn endlessly. Intellectual property scales forever, generating wealth across borders. The recession was never the end. It was the setup for the next empire. Every recession in history created at least one new class of the ultra-wealthy. The market doesn't just crash, it transfers power. While millions lose everything, a few gain everything. 2028 is no different. The question is, which side are you on? They told you a recession means suffering for everyone. That is the first lie. Recessions don't destroy wealth, they reroute it. It doesn't disappear, it moves. In 1929, while banks collapsed, a handful of men bought entire industries for pennies. In 2008, hedge funds shorted the housing market and made billions overnight. In 2020, while the world locked down, e-commerce kings tripled their net worth. 2028 is already here, and the blueprint hasn't changed. Speed is the first weapon. Information is the second. Most people react to a recession. The wealthy anticipated it. By the time the news hits your phone, the move has already been made. The 2008 crash created more real estate millionaires than any boom in history, because everything went on sale for those who had cash. In 2028, history is rhyming louder than ever. Do you hear it? Every recession triggers the same government response: print money. And every time money is printed, real assets become more valuable. Property, commodities, businesses with cash flow. They inflate the currency, you hold the assets. Gold has never gone to zero, not once in 5,000 years. When paper money loses faith, hard assets gain power. The wealthy understand one rule: hold what they cannot print. Everything else is speculation. The advantage is always in the preparation, not the reaction. They study the recession before it arrives. They move capital before the crowd panics. By morning, the move is already complete. Technology doesn't pause for a recession. It accelerates through one. The infrastructure of the next decade is built in the wreckage of this one. Whoever builds it first owns the future. In 2020, e-commerce exploded not despite the crisis, because of it. Entire consumer behaviors shifted in 60 days. Those who controlled the supply chain printed money. 2028 is about to do the same thing, in different categories. The recession doesn't scare the prepared, it excites them. Every panic sale is a discounted acquisition. Every failed competitor is freed up market share. This is chess, not checkers. Supply chains collapse in a recession, and whoever rebuilds them first wins the decade. Every shortage is a business opportunity hiding in plain sight. The wealthy don't just see the problem, they become the solution. And they charge accordingly for the essential solutions they provide to the market. Cash is king in a recession, but only if you deploy it correctly. Holding cash during inflation is loss. Deploying it into distressed assets is gain. The wealthy don't fear market downturns, they budget for them. Farmland has never failed as a long-term asset, not in 1,000 years. Food is the one commodity that recessions cannot eliminate. The smart money in 2028 is moving toward what humans will always need: Water, food, energy, shelter. Real assets built during a recession cost less to construct. Labor is cheaper, materials are discounted. The building that costs $10 million today is worth $40 million when the cycle turns. Timing is not luck, timing is mathematics. The ultra-wealthy don't stop working in a recession. They relocate it. Remote decision-making, global asset acquisition. No office, no boundary, no ceiling. The world becomes the boardroom. Recessions force innovation, desperation becomes invention. The companies that define the next decade are being founded right now. In garages, in spare bedrooms, in borrowed time. The next billion-dollar brand started in the worst moment. Always. Manufacturing moves in recessions. Costs collapse. New factories emerge. Whoever controls the production owns the margin. Supply creates leverage. Leverage creates wealth. The product is secondary to the distribution. The recession hits differently across geographies. What collapses in one country creates demand in another. The global investor doesn't have a home market. They have a world market. And the world is always open somewhere. Alternative assets surge when traditional markets fail. Art, rare collectibles, classic cars, watches. The wealthy park capital in things that hold intrinsic value. Recessions create sellers. The smart money becomes the buyer. The smart money becomes the buyer. Energy is the one industry that never fully collapses. Every recession accelerates the energy transition, not slows it. Government stimulus follows energy. Every single time. The investor who owns the infrastructure owns the future. The investor who owns the infrastructure owns the future. Healthcare never stops. Recessions don't cure illness. The healthcare sector is recession-resistant, by definition. Medical technology, diagnostics, telehealth, insurance. The demand never softens, only the funding changes. The demand never softens, only the funding changes. The ghost kitchen model exploded in the last recession and never stopped. No storefront, no lease, maximum margin. The consumer sees a brand. The owner sees cash flow. It's the same food, different economics. The consumer sees a brand. The owner sees cash flow. It's the same food, different economics. Online retail is the new retail, period. In a recession, people hunt for deals online first. The seller who owns the right products at the right price captures the entire spending. Physical stores are the overhead. Digital shelves are infinite. Physical stores are the overhead. Digital shelves are infinite. Recessions drive demand for education, especially practical skills. People retrain, people upskill, people pay for transformation. Online education is a $500 billion industry that recession fuel. Whoever owns the curriculum owns the income stream. Whoever owns the curriculum owns the income stream. Digital assets aren't a trend. They're an alternative financial system. In every recession, trust in central banks erodes. When trust erodes, decentralized alternatives gain legitimacy. The money that left the banks had to go somewhere. The money that left the banks had to go somewhere. The best opportunities in a recession are never public. They move through networks, rooms the average person doesn't enter. The wealthy protect information like currency, because in a recession, information is currency. Because in a recession, information is currency. Logistics is the circulatory system of the economy. When it breaks, whoever fixes it wins. The recession of 2028 is a supply chain recession as much as a financial one. Build the artery and everything flows through you. Build the artery and everything flows through you. Recession valuations create the cheapest entry points in venture capital. Billion-dollar companies are funded at million-dollar prices during downturns. The money that moves in now is the money that multiplies later. Patience is the premium skill. Patience is the premium skill. Rental income doesn't stop in a recession. People still need housing. The landlord who bought in the dip collects rent during the recovery. Real estate cash flow is the closest thing to a money machine that legally exists, and recessions put it on sale. Businesses fail in recessions. Owners panic and sell cheap. The acquirer sees the asset, not the emotion. Strip the fear. Fix the fundamentals. Relaunch. One acquisition in the right recession can fund a generation. One acquisition in the right recession can fund a generation. One acquisition in the right recession can fund a generation. Currency wars begin during recessions. Exchange rates become weapons. The investor who plays currency movements in 2028 has a second income stream. Every economy that weakens strengthens something else. Money always moves. You just have to follow it. Every economy that weakens strengthens something else. Money always moves. You just have to follow it. The wealthy use recessions as thinking time. When everyone panics, they go quiet and calculate. Strategy built in silence is executed with precision. The plan made in the valley reaches the peak first. The plan made in the valley reaches the peak first. The plan made in the valley reaches the peak first. Results in a recession confirm the thesis. The moves made in the darkness are validated in the light. Every strategy that survived the doubt earns the reward. This is what preparation looks like from the other side. This is what preparation looks like from the other side. This is what preparation looks like from the other side. Part 1 ends where most people think the story begins. The recession hasn't ended, it's accelerating, and the people who understood are already 3 moves ahead. This is only the setup. The real game starts now. This is only the setup. The real game starts now. This is only the setup. The real game starts now. Destruction is always followed by construction, but only those with capital can decide what gets built. In 2028, the rubble of the old economy is the foundation of the new one. Are you holding the bulldozer or standing in its path? The new factory doesn't need 1,000 workers. It needs 10 engineers and 1,000 machines. Automation is not the job killer people feared. It's the margin multiplier investors dreamed of. Own the machine, collect the output, scale without ceiling. Artificial intelligence is the industrial revolution of 2028. Every business that deploys it gains an advantage impossible to compete with manually. The companies that lead in AI aren't just worth more, they're structurally invincible. Intelligence as infrastructure, deploy it or compete against it. The 2028 recession severed the bond between income and location. The geographic boundary of wealth has been permanently removed. The entrepreneur who earns in dollars and lives where costs are low wins twice. Arbitrage isn't just for currency traders anymore. Global trade doesn't stop in a recession. It just becomes more expensive to navigate. The freight forwarder, the logistics broker, the supply chain consultant. These are the silent millionaires of every economic downturn. Complexity is their product, confusion is their pricing. Subscription revenue is recession-resistant when the product is essential. Monthly recurring income that auto-renews as a machine running while you sleep. The SaaS founder doesn't chase sales. They build systems that sell. One product, infinite customers, no inventory. Diversification is not cowardice, it's architecture. One recession can destroy a single asset investor. It cannot destroy a strategically diversified portfolio. Real estate, equities, cash, commodities, digital assets, each layer protects and powers the others. Attention is the scarcest currency in 2028. In a recession, advertising budgets collapse, and the cost of attention drops. The brand that buys eyeballs cheaply now sells expensively later. Media arbitrage, the oldest game in marketing, still working. Crisis consultants are the highest paid people in a recession. Companies are dying, and they'll pay anything to survive. The person who can diagnose the problem and prescribe the cure is invaluable. Build that skill, and the recession pays your best year's salary. The informal economy never freezes, it adapts in real time. Cash businesses with real physical products continue through every economic cycle. Food, service, necessity goods, these never stop selling. The best recession business is often the simplest one. Private equity thrives precisely when public markets fail. Distressed businesses sell for fractions of their intrinsic value. The acquirer restructures, refinances, and relaunches. The return doesn't come in months, it comes in years, but it comes enormous. Media ownership in 2028 is the new land ownership of the 1800s. An audience is a compounding asset that appreciates with every episode. The podcaster with 100,000 loyal listeners can move markets. They don't need a boss, they are the boss. Insurance is the only product people buy, hoping never to use. In a recession, fear drives premiums, uncertainty drives enrollment. The insurance operator collects regardless of market conditions. It is the most elegant form of passive income ever invented. Distressed luxury is one of the oldest plays in recession playbooks. High-value goods flood the market when people need cash fast. Buy low, store well, sell when the market recovers. A watch bought for $3,000 in panic is worth $12,000 in recovery. Knowledge has always been worth paying for. In a recession, the race to reskill becomes desperate and paid. The educator who captures that urgency captures recurring income. Teach once, collect forever. Cloud infrastructure is the utility of the 21st century. Every business that goes digital pays to run on someone else's servers. The infrastructure provider never worries about the economy. Every startup that launches adds to their revenue permanently. Raw land in the right location is the most undervalued recession asset. Raw land in the right location is the most undervalued recession asset. It produces nothing and requires nothing until rezoning changes everything. The land play takes patience. It rewards with permanence. Dirt doesn't depreciate. Politics do the work. Salespeople never go broke in a recession. The great ones get rich. When budgets tighten, only elite salespeople close. The average is eliminated. The exceptional is promoted. Sales skill is recession insurance that pays a bonus. Transportation doesn't stop when recessions hit. Essential goods still move. Medical supplies still ship. Food still delivers. The transport operator with the right contracts wins every quarter, recession or not. Move what people need, never lose the contract. When companies downsize, they still need talent to survive. The recruitment firm that specializes in essential sectors earns regardless of the economy. Healthcare, defense, technology, these never stop hiring. Place one executive, earn a month's average salary in a single transaction. In a recession, people repair instead of replace. The skilled repair technician becomes essential overnight. Low overhead, high demand, repeat business built in. The simplest service businesses survive what glamorous startups cannot. When housing prices fall, rental demand spikes. People who can't buy still need to live somewhere. The landlord who bought at the bottom rents at market price from day one. The spread between the purchase and the rent is pure leverage. Energy independence is the new status symbol and a profit center. The solar installer who rode the subsidy wave built a business immune to energy prices. Government stimulus always follows clean energy. In every recession, every country, follow the stimulus, build the business. Value investing was invented for recessions. When quality companies trade at distressed prices, the math is simple. Buy the business. Wait for the market to remember it's good. The only ingredient patience can't substitute for is courage. The pivot that happens in a recession often defines the next decade. Netflix, Airbnb, Uber. All born or transformed in economic crisis. Constraint forces creativity. Crisis forces reinvention. The best version of a business is often discovered in its worst moment. The pivot that happens in a recession often defines the next decade. Private label products built on third-party platforms are the new franchise. No storefront, no staff uniform, no franchise fee. Own the brand, control the margin, scale without physical limits. The recession didn't hurt this model, it launched it. Tax strategy becomes a profit center in a recession, not an afterthought. The investor who structures correctly keeps more of what they earn. Legal tax minimization is not avoidance, it's engineering. Every dollar saved in tax is a dollar that compounds for a decade. The commodity trader who understands pricing gaps between markets earns in both directions. Buy where it's cheap, sell where it's expensive. The recession widens those gaps and multiplies the opportunity. Trade is civilization's oldest wealth transfer mechanism. It still works. Healthcare is the last recession-proof business category. People don't stop getting sick when markets crash. The medical entrepreneur who builds systems, not just practices, owns a compounding asset. Recurring patients, insurance coverage, government reimbursement, 3 income streams in one office. Intellectual property is the most scalable asset ever created. A song recorded once earns every time it plays. A book written once earns every time it's read. In a recession, content consumption surges. Royalties don't go to zero. Vending machines are the most underestimated passive income vehicle in any economy. No employees, low overhead, predictable revenue, recession-resistant products, placed in the right location. A machine earns while you sleep. The simplest system often generates the most consistent income. Print on demand eliminated the final barrier to product entrepreneurship. No warehouse, no inventory, no minimum order. Design once, sell globally, profit permanently. The recession eliminated their competitors. Their costs stayed the same. Alternative assets outperform stocks in specific recession cycles. Fine wine, rare whiskey, vintage sneakers, luxury handbags. These markets are driven by passion, not panic. And the collector who buys in crisis sells in triumph. The room you're in determines the ceiling above you. Recession deals are made between people who trust each other. Access to the right network isn't a luxury. In 2028, it's infrastructure. Join the room, or build a better one. Part 2 reveals the architecture of wealth built in chaos. Every category, every system, every silent millionaire in the making. The recession isn't the problem, it's the portal. Part 3 is where the storm intensifies, and the stakes become everything. The second phase of every recession is the most dangerous. The panic is no longer theoretical, the losses are real, and the decisions made in this window define decades. The clock doesn't care if you're ready. Bank runs are not historical relics, they are 2028 events. Digital bank runs happen faster than physical ones. One tweet, one rumor, one viral post, and billions disappear in hours. The prepared moved first. The layoffs arrive in waves, and each wave is bigger than the last. Every pink slip is a forced entrepreneur being created. The employee who loses a job becomes the freelancer who earns more. Disruption is painful, but for some, it is the beginning. Energy price volatility in 2028 is the signal, not the noise. Oil crashes destroy consumers. They gift opportunities to operators. The energy infrastructure player doesn't speculate on the price. They own the pipe. The price goes through them. Desperation creates deals that prosperity never could. The startup burning its last cash will accept terms unthinkable in a bull market. The investor with dry powder in a funding crisis is a king without competition. Patience stored is leverage deployed. Every economic fire burns what was already dying. The weak businesses, the over-leveraged investors, the bad ideas. What remains is what was always strong. And in the ash, the next great cycle takes root. Fear is the tax that failure charges before the attempt. The business owner who calculates through fear instead of fleeing from it always finds a path. Every viable business has a recession version. Find it before the recession finds you. Central bank announcements are the most valuable information in any recession. Every word is engineered. Every pause is deliberate. The investor who understands the code profits from the translation. They didn't say, we're fine. Listen to what they didn't say. Stimulus is the map. The money is the destination. Every dollar of government spending lands somewhere and creates wealth for someone. The investor who follows the stimulus follows the return. Read the bill, not the headline. In a recession, the negotiation power shifts completely. The buyer holds all leverage. The seller has only one option: capitulate. The best acquisition price is always reached in silence. Walk away once, they'll call back. Behind every foreclosure is a transaction, not just a tragedy. The bank wants the asset off their books, fast. The investor who moves quickly pays below replacement cost. It is not exploitation, it is the system working exactly as designed. Commercial real estate in 2028 is experiencing its most dramatic repricing in history. Office space, retail, and mixed-use properties trading at Depression-era valuations. The investor who converts distressed commercial into residential wins twice. Acquire in pain, convert with vision, profit in recovery. The gig economy doesn't create recessions. Recessions create gig economies. When the corporate umbrella collapses, solo operators emerge. The best ones realize they were always the product. They just needed a crisis to prove it. Every recession tests the narrative of every asset class. In 2028, digital assets face their greatest test and their greatest opportunity. The ones that survive are the ones that solve real problems. The ones that don't fund the ones that do. Inflation and recession arriving together is the cruelest economic combination. Stagflation, the double bind that broke the 1970s. But the investor who holds real assets in stagflation is protected on both sides. Prices rising on what you own, costs falling on what you buy. The best deals in a recession are never advertised. They're shared privately, among those who already understand the market. Capital pools because smart people recognize they move faster together. The syndicate is the oldest investment structure, and still the most powerful. The louder the noise outside, the more disciplined the investor inside. Chaos is the environment in which contrarian positions become legendary. History remembers who bought when others sold. Nobody remembers the crowd. Decisive action is all that history records. Healthcare doesn't wait for the economy to recover before innovating. Telehealth, remote diagnostics, AI-assisted medicine, these are not trends. They are permanent infrastructure shifts. The company that digitizes healthcare in this recession owns the next generation of patients. Healthcare innovation is permanent. It is not going anywhere. Business closures are not endings. They are transitions of ownership. The location doesn't fail. The business model fails. The investor who sees the asset beneath the brand makes the move. A closed restaurant is a discounted commercial space waiting for the next vision. Infrastructure never stops needing investment. Recessions prove it. Water, roads, power grids, these are permanent, non-negotiable assets. The government always finds money to maintain what civilization requires. Invest in what cannot be shut down. Recession increases cybercrime by every measurable metric. Desperate people, distressed companies, digital vulnerabilities everywhere. The cybersecurity firm sees its demand spike exactly when others see theirs collapse. Protection is recession-proof because threat never takes a holiday. Mental health demand surges in every recession, always, without exception. The The entrepreneur who builds scalable mental health services in 2028 serves a permanent market. This isn't exploiting suffering. It's filling a gap that institutions failed to fill. Build the solution. The need will never run out. The luxury market doesn't collapse in a recession. It shrinks and concentrates. The wealthy still travel, still dine, still consume at the top of the market. The businesses that serve the top 1% experience a fraction of the downturn. Position yourself at the premium tier or accept commodity pricing. In a recession, people fix their cars instead of buying new ones. The automotive repair industry sees demand rise as car purchases fall. Trades-based businesses are the most recession-resistant category in existence. You cannot outsource a brake job to a server farm or a cloud platform. In a recession, companies pay a premium for certainty. This isn't exploiting suffering. It's filling a gap that institutions failed to fill. Intelligence has always been the highest margin product. Own the cold, control the chain. Defense, disaster recovery, infrastructure repair, healthcare services. The recession doesn't cancel networking, it makes it more valuable. Defense, disaster recovery, infrastructure repair, healthcare services. Proximity to power is its own form of investment. Recessions don't reduce data, they generate more of it. Retail liquidation is one of the most overlooked recession profit mechanisms. The ghost of a mall becomes the bones of a neighborhood. Part 4 begins at the inflection point, and everything changes. Defense, disaster recovery, infrastructure repair, healthcare services. Proximity to power is its own form of investment. Every company that goes digital adds to the data center's revenue permanently. The operator who owns physical computing infrastructure in 2028 owns the utility of the century. Financial distress creates the most unusual investment opportunities. The buyer of discounted cash flows earns the spread between now and later. It is not predatory, it is the time value of money applied at scale. Retail liquidation is one of the most overlooked recession profit mechanisms. Low acquisition cost, massive square footage, zoning that can be changed. The tension of Part 3 reaches its maximum here. Every system tested, every investor stressed, every business redefined. Part 4 begins at the inflection point, and everything changes. Relationships built in crisis are the most durable ones ever forged. People sell future income streams for immediate cash in a recession. Resold at 60 cents. The margin is the business. Someone has to buy the closeout. It might as well be you. The developer who converts dead retail to mixed use generates the biggest spread in real estate. Access to the right person at the right moment changes everything. People sell future income streams for immediate cash in a recession. Brand name inventory sold for 10 cents on the dollar. The dead mall is one of 2028's greatest hidden assets. But the darkest moment of the recession is also the most valuable moment. The analyst who understands what the market is doing sells access to that understanding. Market research, consumer data, and competitive intelligence are worth more when risk is highest. Protection is recession-proof because threat never takes a holiday. Strategic philanthropy is the overlap of generosity and tax engineering. Cold chain infrastructure is invisible until it's not there. The foundation is not just charity, it is architecture. The truly wealthy don't just diversify assets, they diversify jurisdictions. The wealthy still travel, still dine, still consume at the top of the market. The food supply depends on it, the pharmaceutical supply depends on it entirely. The tension of Part 3 reaches its absolute maximum here. The inflection point is invisible until after it passes, but those who move before it feel it immediately. The assets acquired in darkness are now gaining in light. The wealth transfer is complete. The accounting begins now. The recession created them, but they don't announce it. Quiet wealth is the most durable kind. The new rich of 2028 are not celebrities, they are operators. They built in silence, now they expand in silence. Every dollar deployed in the recession is now returning 3. The property bought at distressed prices now carries market rents. The neighborhood written off as lost is now the most desirable zip code in the city. Recession investing is neighborhood transformation with financial returns attached. The companies built in the recession are now going public. Every recession repeats its patterns. The names change. The playbook doesn't. The startup funded for pennies is now worth billions on the open market. Recognition comes after the work, never before it. Recessions are the great consolidators of industry. Weak players exit, strong players acquire, dominant players emerge. The company that survived and acquired is now the category leader. Competition eliminated not by innovation, by endurance and capital. The developer who broke ground in the recession is now delivering into the recovery. The patient investor in permanent assets is always the last one laughing. The spread between the entry and exit is generational wealth. This is not luck. This is the execution of a plan made 3 years earlier. Private equity funds raised at the bottom of a recession always outperform. The data is consistent across every economic cycle in modern history. The money raised in fear generates the returns celebrated in euphoria. Every great fund manager understands recessions are the product. The greatest wealth transfers in history happen through recessions and inheritance, not the assets, the architecture. The structures built to protect during the crisis now protect across generations. The recession never fully ends for the investor, it just moves geography. The technology company founded in the recession is now defining the industry. What was built to solve a crisis problem now serves billions. The crisis was the design brief. The solution became the empire. Innovation doesn't wait for comfort. It's born from constraint. By the time the playbook is on a conference stage, it's been deployed for 2 years. The early mover has already exited half the position. The crowd learns what the wealthy did. The wealthy are already doing the next thing. The inflection point is invisible until after it passes. Wealth is not just earned, it is kept. The tax structure built during the recession is now compounding on every dollar earned in the recovery. Legal, permanent, generational. The IRS taxes income, structures protect wealth. Innovation doesn't wait for comfort, it's born from constraint. By investors who understand that the best time to build is in crisis. Every generation of wealth has a founding moment. The recession didn't just create individual wealth, it created communities. The people who built together in the worst times own together in the best times. The network built in crisis is worth more than the money earned in it. Community is not a soft metric, it is a structural advantage. The network built in crisis is worth more than the money earned in it. Infrastructure built in recession pays dividends for 50 years. The toll road, the port, the power grid. These assets compound in silence while markets scream. The patient investor in permanent assets is always the last one laughing. Every recession becomes a documentary, a book, a lesson plan, but the lesson is always the same. Those who moved while others froze changed their lives permanently. Freedom is the actual return. The money is just the mechanism. The next wave is already forming, even as this one crests. The recession never fully ends for the investor. It just moves geography. The next undervalued market, the next emerging district, the next unloved asset class. The recession is not a moment. It is a permanent mindset. The recession created a generation of coaches, consultants, and advisors who lived the lesson. They don't teach theory, they teach survival. And the businesses that hired them survived when others didn't. Experience earned in crisis is the most valuable credential. Not all wealth built in a recession is hoarded. Some of it rebuilds the world. The investor who wins big and invests back earns a different kind of legacy. Wealth without purpose is mathematics. Wealth with purpose is architecture. The greatest return is building something that outlasts you. At the end of every financial documentary is a human story. Not the portfolio, not the deal. The family that didn't go under, the business that didn't close, the life that changed. The recession tested everything, and what survived proved itself. The story of what you did in the recession is worth more than most know. Books, courses, speaking, consulting. The survivor who documents becomes the teacher who earns. Experience is the product, distribution is the business. The recession of 2028 affected every nation, but it ended first for those who understood it. The recovery always comes, it has never once failed to arrive. No single country, no single currency, no single point of failure. The portfolio of the future has no borders. Not every great recession investor is a billionaire. Many are simply free. They have reached their goal years earlier than planned. Free from the job they hated, free from the debt that owned them, free to choose. Preparation is not pessimism, it is the highest form of optimism. The lesson of 2028 is not for the past, it is preparation for the next cycle. Books, courses, speaking, consulting. The generation that learns this now will be ready before it arrives. Books, courses, speaking, consulting. The lesson of 2028 is not for the past, it is preparation for the next cycle. The recovery always comes, it has never once failed to arrive. The generation that learns this now will be ready before it arrives. Wait. 407 check. Preparation is the only competitive advantage that matters. And in 2028, preparation is the only competitive advantage that matters. Recognition comes after the work, never before it. The investor who waited for validation missed the move. The one who moved without recognition made the gain. Operate in obscurity, emerge in dominance. Every story of wealth transfer starts with a moment of understanding. Someone heard something, read something, watched something, and then they did something. That's the difference. Information without action is just entertainment. Recession investing is neighborhood transformation, with financial returns attached. The question is not if, it is whether you are positioned for it. Every business closed and every asset sold in panic was a position surrendered. Every position held with conviction was a return multiplied. History is not just for historians, it is a roadmap for investors. The student who studies the 2028 recession will recognize 2036 when it arrives. The cycle is predictable for those who understand it, and predictability is the closest thing to certainty that financial markets offer. The most valuable education in wealth building is proximity to someone who has done it, not a textbook, not a YouTube channel, a person who made the move and can explain it. Mentorship in a recession is the highest ROI relationship available. Find the person, buy the coffee, ask the question that changes everything. The recovery confirms what the recession revealed. The strong got stronger, the prepared got richer, the patient got rewarded, and the cycle already begins its next rotation. Watch the signals. You now know what to look for. The truly wealthy don't need to show it. The assets compound whether they watch or not. The systems run whether they're present or not. This is the end state. Everything before it was the work. The recession of 2028 is over. The preparation for the next one has already begun. For the people in this room, the cycle is not a threat. It is a schedule. They know what comes. They know when to move. They know what to buy. Function.default.API.create.a.role scene our description because they've done it before and they will do it again. Wealth is not a destination. It is a direction. The ship that holds course through the storm arrives where others never reach. The recession was the storm. The direction was set before it arrived. And now the destination is visible. Every story ends, but the lesson doesn't. The 2028 recession will be studied for 50 years. The people who moved already know what they did. The question is what you will do with what you now know. The recession didn't take from you. It revealed what you were made of. The recession didn't take from you. It revealed what you were made of. The wealth was always available to those who understood where it goes. In every recession, the money doesn't disappear. It just changes hands. Are you ready to be on the right side of that transfer?